$200 silver, $300 per ounce silver. We're hearing all these what seem to feel like outlandish predictions for the price of silver. But in this video, I'm going to show you why I can see $130 silver, and I'm going to prove it to you with math and charts. Also, big Fed meeting coming up this week. We're going to touch on that and why that could be critical for the price of the precious metals. There's some interesting things going on at the COMEX, a little more interesting than the normal EFP and the inventory going down, all the things everybody's talking about. We've got another interesting component happening on the COMEX paper trading world. We're going to talk about that and what is going on with Russia and silver. We're going to talk about what's happening there, but first let's talk about what's happening here. You've decided to join me down here in the basement. That's a big deal. Your time is valuable. Thank you very much. I want you to enjoy your stay down here. Please subscribe to the channel. That is free. And I want you to leave a comment. You don't have to agree with me. Trust me. That's how we can learn, is from each other. Let's go out and take a look at what is happening right now in the gold and silver market, because guys, every day seems to be a little bit better and better. We've got a lot happening, but here's Kitco spot price update on gold. We are up $31 per ounce. Wow. Silver is now up 45 cents per ounce spot price. The spot price, which is always usually lower than the futures price, is $42.66. The Chinese market must be dragging us up to their levels. It's going to be interesting to see how all that plays out. But I promised you that I would show you on a chart how we can get to $130 silver. Here's the chart we're going to look at, but I want to give proper credit. This was posted by Tavi Costa, one of the most respected names in the precious metal sector. He's talking about a compelling chart for silver and talks about how over time, relationships always come back into equilibrium, always come back into normal. So when we look at this chart, this shows silver to the S&P 500. It's a ratio, right? How much is silver worth in relation to the S&P 500? Now, when we look at this chart, we can see a couple interesting things unfold. Back here in the kind of around the 1980 time frame, we were all the way up here, okay? Silver was, quote unquote, overvalued versus U.S. equities. We know that was coincided with the 1980-ish high in silver around $50 per ounce. When we go out to the 2011 timeframe, we see again, it gets up here, 0.02. That means that the value of silver was basically worth 2% of the S&P 500. As you can see, we had some periods here right around 2001 when the tech bubble burst, when silver to S&P 500 got very low. This number, and currently where we are low again, I want to point out, is not 0.02, but 0.0029. So guys, to get back up here, okay, if we get back up to this 0.02 level, okay, that would mean for right now, for the price of silver to be 2% of what the S&P 500, the S&P 500 is around 6,500, we would need $130 per ounce silver. So when we hear these figures like $100 silver, $80 silver, that so many people are scoffing at, the math shows that several times in history, we did get to a point where the price of silver was equal to 2%, even more of the S&P 500. And if we were to get there today, I'll repeat it, for silver to be 2% of the S&P 500, we would need a silver price of $130 per ounce. This isn't even factoring in things like inflation. This isn't even factoring in all the other factors that we know now, like the output of silver peaked in 2016 from the mining sector. Did you know that? Right? We had peak silver in 2016. Since then, there's been a decrease in the amount of silver being created by the mining companies. And hey, I want to send out a plug. I'm super excited. I want to show you guys something that I got from First Mint yesterday. Where did I put it? Here it is. Came in this really cool box. Check this out. Look at that First Mint box. But what's even cooler is what's inside of this. They're 10 ounce, 1776 Freedom Bar. It is awesome. You can check it out on their website. You know what? I'm going to run out there right now. I really appreciate First Mint for sponsoring Ron's Basement. Let's run out there. I want to show you this. I'm super excited. Oh, here we go. All right, First Mint, and see if I can figure this out live in action here. We'll go to their store. Let's go to View All. And these are all the different products, 5 ounce bar, 10 ounce bar, number of different products. There's the 77. They have a 17.76 ounce version of that bar. That's currently. So you are correct. Thank you, Susie. Now you can see it. Sorry about that, guys. All right, let's go back up here. Let's start all over again. We're going to go out to the main site. They're having a big sale, $1 over spot. For all the First Mint branded silver. And if you go to their store and go to View All, I want to show you where this bar is. And you go down, there's all their different bars and rounds they have available, the Lunar Dragon. That one is sold out. That's the 17.76 ounce version of the bar. But if we go down a little further, come on, there it is right there. The 10 ounce, that's the one I just showed you, silver cast Freedom Bar. And it comes with that really cool display case. I think it's super cool. I'm very appreciative to First Mint for sponsoring Ron's Basement, for allowing me to create the content where we talk about silver, gold, the things we love. Don't forget, First Mint is owned by First Majestic Silver. So the silver you get from First Mint is mined by First Majestic in Mexico, shipped to the mint in Las Vegas, Nevada, and then it goes straight to you. And there's a discount code, VIPRB. Don't forget about that. Free shipping on orders over $199. It's a company you can trust, and they've got some real world-class, unique, original silver products. Okay, so that's going on there. Now, let's talk about this $130 silver within the setup of what we're going to have tomorrow from Jerome Powell and the Federal Reserve. Actually, that'll be on Wednesday, when we're going to hear the latest decision on monetary policy. Right now, guys, they are up a creek. I want to share with you, this came from a Fed member, a previous Fed official herself, and make sure I share the right screen. Sorry for that screw up earlier. I apologize. Worst kind of setup for the Fed. What Wall Street is saying about central bank's next rate decision. Okay, and it tells us, right, we had a weak labor data that's been coming out, and then that's overshadowing sticky inflation print last week, keeping investor expectations intact for that the Fed will cut rates on Wednesday. All right, now here, the Fed weighs its dual mandate of full employment and price stability when deciding whether to change interest rates. This is where it gets super interesting. Quote, "It's the worst kind of setup for the Fed," said Claudia Sahm. She's New Century Advisors chief economist and a former Federal Reserve Board economist. We have a former Federal Reserve Board economist, easy for me to say, saying that the Fed is in the worst kind of setup. She said, quote, "They will not be cutting rates because we have good news on inflation. They're only cutting rates because we have bad news on employment." We aren't going to go down the Fed rabbit hole, guys, but we've talked about this ad nauseum. This is stagflation. When the Fed is cutting rates while we have high inflation, that means they're giving up on the fight against inflation. That means the value of the dollar will continue to go down. That means if you choose to use the US dollar as the unit of measure for the ounces of gold and the ounces of silver that you own, right, that value will only continue to go up. The Fed is up a creek without a paddle. That's the bottom line there. Let's talk about some crazy going ons at the COMEX. We've been talking a lot about the exchange for physical situation that's happening between the futures market in the United States and the physical market at the LBMA. We know that there's some strain on the inventories at the LBMA. People have spent decades studying this. All of this is leading up to a potential squeeze, although we want to have a squeeze. We don't want a rocket ship spike up. Those are fun. Those are exciting. We probably won't complain. However, what we really want to see is long-term sustained growth in the silver price, a long-term squeeze. And what we're seeing, some interesting developments at the COMEX. I'm going to share this first time that I've heard anyone talking about this interesting phenomena. This came from Gavin. He says there's a war going on in silver between two big boys. Check out the volatility in each 5-minute candle. I believe this was from Friday. Someone really wants it down, but it gets bid back up on every time. And when you look at this, very interesting. He's got it circled in blue here. There's a war. Those are like pretty big candles. So like that candle represents the zone that silver traded in during each of those 1 5-minute increments. Each one of those bars or candles, as they're called. And that is very, very unusual. That does indicate there's a bit of confrontation, let's say, going on in the silver market. And that's in the futures market. So we're going to keep a close eye on that. On top of that, let's look at it one more time. I wanted to share this one with you from Peter Carruth. He's the guy who wrote the book that so many people are fond of on silver, but he puts out this great chart. Don't forget, right? Look at that. I think that's one of the most visual representations. The red area represents the silver deficit. And if we look at this chart and we count 1, 2, 3, 4, 5 years now of silver deficit. And remember, right, something so critical, very simple, very simple. Where's my ounce of silver? Well, I'll get this back out again. The 1776 bar from our friends at First Mint, right? This silver right now, what that chart just showed you, that's a 10-ounce bar. Doesn't matter, right? We know one thing, right? Today, we said this yesterday, but we can say it again today. The amount of this, look at that beauty, right? That's on the face of the earth is lower today than it was yesterday. I mean, imagine if somebody came to you and said, hey, I've got something you can invest in, and I can pretty much guarantee you that tomorrow there's going to be less of it available on the face of the earth. Oh, and by the way, this thing that you can invest in has huge demand behind it. I mean, wouldn't you think that's almost a no-brainer, right? We've been talking about it since the price of silver was $20 per ounce, but what a powerful, and tomorrow, right? Tomorrow we can expect the same dynamic to be true. Tomorrow there will be less physical silver on the face of the earth available for humans to use, to use either for industrial purposes or to use as an investment. There will be less tomorrow available than there was today. To me, that gets me kind of excited. It's very interesting. And we do know, what about Russia? What's Russia doing? Those Russians, right? They're adding to that dynamic that I just talked about. Let's go look at some interesting commentary coming out about Russia. This came from Gold Telegraph. This was from back in July, and then I have an updated one for you. But they said this: many may have forgotten, but late last year, Russia unveiled a plan to add silver to its state reserve fund for the first time in history. Talk about a potential whale in a small market. And then we got this update, again from our friends at Gold Telegraph. Russia is likely buying silver right now for its reserves. This is monumental. Silver is a tiny market compared to gold, yet it's now trading at a 14-year high. When a central bank moves into such a small strategic metal, it's felt in a big, big way. That, everyone, is the law of small numbers that we talk about all the time. Whether we're talking about the total amount of the world's reserve assets, the total amount of the world's financial assets that are invested in precious metals in general, silver and gold, or if we zoom into silver, it's even more exaggerated. We love it. We talk about it all the time, but we probably don't realize that it's actually kind of a small market. As measured in US dollars, it's gone up significantly over the last year to our delight and satisfaction. But the reality is it's still a very small market, and a market that a whale or a big buyer, whether it's that David Bateman, who has almost 13 million ounces of silver, right, worth what, 550 million US dollars, or a country like Russia buying it for their strategic reserves. And now we've got even the United States talking about silver being a strategic metal. I think the future looks bright for all of the precious metals. But when we think about the dynamics that are specific to silver, it's even more exciting. And let's talk about the mining stocks. Before we do that, I also want to say thank you to channel sponsor First Mining Gold. That sign right above my left shoulder. It's a stock that I've owned for years long before they sponsored my channel. They're a Canadian gold development stage company. They've got two huge multi-million ounce projects in Canada, Springpole in Ontario and Duparquet located in Quebec. These projects both have multi-million ounce reserves. It's gold in the ground in Canada being worked through the development stage, which is catalyst rich. And don't forget, the big mining companies are going to need to build new mines in the future, and they haven't been investing into exploration and development. First Mining has a lot of gold in the ground in Canada, which is a very, very safe jurisdiction. And what is happening right now in the gold mining sector, in the gold mining sector is nothing short of astonishing. There is still great value. Again, I'm not a financial advisor. Don't make any financial decisions based on what I'm saying. But the gold mining sector and the silver mining sector are presenting unbelievable, I believe, opportunities for capital appreciation as we go into the next months, quarters, and oh, cool. Hey, all right, guys. Okay, thank you, guys. Everybody say hi to, that's upstairs Susie, right? She loves her silver as well. She's letting me know that we've got 100 likes. That's massive. Thank you very much. I will ring the golden gong in just a minute, but I want to get through this point that's crazy about the gold and silver mining sector. And the reason why we want to talk about the mining sector is that it's just starting to take off, okay? And as more and more of the generalist, or as maybe some of us like to refer to them, sheeple come into the gold mining sector, that's going to help the entire precious metals ecosystem. It's going to help the value and price of physical silver and gold. It's also absolutely going to be big, big news for the mining sector. But let me read you some statistics, and then we'll cover this a little bit further. Okay, the fact that the silver price and the junior mining stocks are just getting started right now is a very early sign. Gold mining, the big gold miners, this is shocking, guys, are making up to $2,000 per ounce or more in profit for each ounce of gold that they pull out of the ground. For each ounce of gold that the big miners are mining, of the $3,600 that they're selling it for, they are making $2,000 in profit. Whoa, take a step back. Think about that. It wasn't that long ago that the price of gold was $2,000, and now they're making that per ounce. Okay, here, let's look at this chart that's going to show it to you in just how dramatic of a fashion this is occurring. Here we go. And this came from Mr. Uppy. Gold miners are printing money, says Mr. Uppy. Margins have never been this fat, and yet most gold stocks are still trading like it's 2015. Okay, when we look at this chart, what we see is the yellow line, right? The yellow line right here, which is the price of gold. The green line represents the all-in sustaining cost per ounce, which, as you can see, is hovering, let's just say, around 1,500, maybe even right around 1,500, maybe a little bit lower. The difference right here between that green line and that yellow line, that big red line I'm drawing for you, that represents the profit per ounce that the gold mining companies are making right now. The mid-sized companies are very early in the rally. If this continues, And if the juniors which are just getting started, the companies that explore and develop, companies like First Mining Gold that we talked about earlier, things could get very, very crazy out there. So stay tuned. Okay, it's going to get very interesting in the actual physical metals market, but also in the mining sector, guys. It could become like a mania. If you're invested in the mining stocks, just be prepared. Who knows, right? A month from now, a year from now, the prices could be down. Mining stocks are risky. Every investment is risky. But doesn't it feel like when you look at the big picture for both gold, silver, and for the mining stocks, like all the winds are in our sail right now? History is on our side. Remember, when you buy gold, when you buy silver, you're buying something that's been around for thousands and thousands of years. Why is that important? Right? Because gold and silver, while we live in this world where we all believe that the US dollar has value, that includes me. I'm 55 years old. My whole life, right? You hand me a stack of $100 bills right now, and my eyes will light up. We've been brainwashed. But the reality is, when you zoom out and look at it through the context of history, gold and silver have survived hundreds and hundreds of fiat currencies that were created that all became worthless. Okay, our founding fathers, right? That's like the 1776 bar from First Mint that I showed you. When they set up the Constitution, when they set up the country, they specifically wanted the money, our money, to be backed by gold. We know what happened in 1971 when President Nixon temporarily took us off the gold standard. But guys, what we are and what we're doing is investing in something that's timeless. I almost forgot to ring the golden gong. We got 100 thumbs up. Hold on. Let's check in with Susie. Susie, are you there? Over?
Yes. So you have 156. I was trying to tell everyone to try and let's get to 200.
What?
Maybe say hi to some people.
Okay, I will. Susie wants me to say hi. Let me ring the golden gong, and then I want to say hi to some of you guys that are out there. I'm going to ring it 3 times. Wow, we are in some great, great times in the precious metals market. I see the Rios. Let's see, who else do we see? I say C130. Good to see you, brother. Okay. I see Roland Brown. I see Ed Lorax. Wow, guys. Man, there's Susie. There's Christina. Good to see you. Who is? ODBG. Old Dirty Bastard Garage. Good to see you, my friend. Right? He's been around. His username always corrects me out. All right, we're going to do it. I'll do my best for you guys. We are, I'm going to tell you something about investing in precious metals. It is decentralized. That means this is one of the most powerful factors. People in crypto, this is why they like crypto, but it also absolutely applies to gold and silver. Gold and silver are decentralized. Okay. No one government, no entity can ever effectively, on a long-term basis, control the value of gold and silver. The value is timeless. What that decentralization means is that no matter where you are, think about where you're joining us right now from in the world. We've got people in India, China, Europe, the United States, everywhere. No matter where you are, spin a globe, stick your finger on it. As long as you land on land or a ship that's in the ocean, no matter where you are, silver and gold are valuable. But then on top of that, think about the fact that you could have spun that globe 100 years ago, 10 years ago, 1,000 years ago, 2,000 years ago, and wherever your finger landed, right? Your great, 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 great to the umpteenth degree grandpa, no matter where your finger landed, where his finger or her finger landed, it would have been valuable. That's a big thing. So what I want you to do, and what I'm going to do my best, hold on here. Sorry, having some voice problems this morning. What I'm going to try to do is say hi, but I want you in the comments to tell me where you are joining us from today. Texas. Hello, Kip in Texas. Great to see you, my friend. Keep coming, guys. Come on, put it on there. Let's go. Let's go, basement dwellers. See if hopefully they're going to start streaming along here. Unfortunately, okay. Hold on. Arizona. Hello, Head Fury. Beautiful, hot Arizona. Where else are we, guys? North Carolina, Michigan, first time view, Alvarado, Texas. A lot of people in Texas love gold. Central Washington State, Huntsville, Alabama, Denmark. Hello, Jesper. Colorado, Tom, good to see you. If I missed you, put it up again. I'll do my best. Scott Myers from Missouri, the state of misery. That's where I am. Indiana. Rickus, Oakland. Oakland is the place. North Korea, Jerry Mandarin. Good to see you. Barcelona, Spain. Pensacola, Florida. Paul. Rafi. Scott from Austin, Texas. C-130 from Tampa, Florida. Man, Brazil. That's what I'm saying, guys. Let me ask you, are gold and silver valuable in Brazil? I think we know the answer to that question. Houston, Kip. Gilbert, Arizona, Spango. North Carolina, Charles. Texas, Randall Marks. The Big Island of Hawaii, the Hawaii Volcano Squad. Mountain Grizzly, Montana. Southeast Asia, TC Boys. Right, guys. Massachusetts. Christina, good to see you, Christina. Guys, the point here, and thank you for everybody that put your name in. Gold and silver have always been valuable and everywhere. Thatch from Tacoma. Ching Chong, Hong Kong. Hello, Kinnicky Chow. Jim Little from South Carolina. Everyone gets ready for it's about to get cold. The storm is here. Okay, backwardization. Oh boy, you put me on the spot. Amsterdam. I'm going to do my best to explain backwardization. I'm not an expert, but I'll do my best. Okay. Hi, everyone. Okay, so backwardization is a situation where usually in the markets, you've got, let's say for silver and gold, the spot price, which is like the immediate price for the metal, and you have the futures price. Typically speaking, the spot price will be a little bit lower than the futures price. And that's the case even today. Here we can go out. I'll go out real look and we'll see what's going on. We'll go to the spot price here and I'm going to share that screen. Okay. Again, this is Kitco. We've got silver at $42.64 per ounce. If we go out to the futures price, we're going to go out to CNBC. Yep. And as you can see, as we would expect, the futures price, it says right at the top, right in blue, silver COMEX December of 2025. That's the futures price, will be a little bit higher. Backwardization is when the futures price becomes lower than the spot price. And what that signifies, I'm not quite sure, to be honest with you. I can give you that definition, but in terms of and at one point I knew, and there is a reason, there is kind of something that can typically signify when that occurs. The spot and the futures price, based on my experience, does seem to be getting a little bit close. But when the spot price, 200 likes?
At the very end.
Okay, I'm going to ring the cowbell. What a day. So let me dig in, we can, here, you know what? Let's Google it. Let's Google it. And then we're going to ring the cowbell. Let's figure out what backwardization means. And let me share the right screen. Here we go, guys. All right. That doesn't matter. Okay. Here we are in Google. What does it mean? The M doesn't work on this keyboard when gold is in backwardization. I probably spelled that wrong, but anyway, let's see if they give us any reason. Looks like AI. When gold, okay, here.
It said that backwardization means it's a run on COMEX inventories.
Interesting. Okay, so someone said it's when it's a run on COMEX inventories. Interesting. Okay, let's see what AI says. AI says when gold is in backwardization, the futures contract price for a future delivery of gold is lower than the current spot price. Okay, like I showed you earlier. So I was right about that. This condition signals that the market anticipates a decline in the price of gold in the future. With the spot price considered too high, it can also indicate, though, high current demand, a perceived shortage of physical gold, or a lack a lack of trust in the ability to deliver that gold in the future. So that kind of makes sense, right? If people think, oh, they aren't, in December, they're not going to be able to deliver that silver or gold, they would push up the current spot price. That would be, I guess, kind of the speculation as to why that might occur or why we may see that here in the near future. But again, there's a number, like a lot of things in life, a number of different potential reasons why that would be the case. All right, guys, I got to run. Thank you for being here. Oh, please subscribe to the channel. I forgot to ask you that. I'd love. Oh, I got to ring the cowbell. Sorry. I got to ring the cowbell. Huh? This came. Okay. All right. We got 200 thumbs up. That's the 200 bell. All right, guys. Yeah, like I was saying, we love you being here. We love you joining us in the basement. We're on an exciting ride with the metals, no doubt about it. Please subscribe to the channel. It's free. But number one, have a great day. Okay. I want you to come back. All right. Be good to yourself, and I'll see you soon.